Hey Maddie, thank you for asking that question. No, it's not silly at all. I really appreciate you reaching out, and I have a lot of people that actually ask me about closing cost. So with closing cost, you can roll them in regards to a refinance because you already own the property. So you can roll them into the loan to where you don't have to pay anything out of pocket at the closing table. When you're purchasing, on the other hand, it's a little bit different. So I would say most of my borrowers have to pay the closing cost out of pocket. I don't work with any loan programs. They're very far and few between to where you can roll them into the loan. Now, there is the instance where if you want to take a interest rate, which I have made a video before about interest rates and par, above par, buying points. Now, you can take a rate if it's out there, if it's available on the market. When it's time to lock, you can take a rate that's a little less favorable, and the lender can give you a credit, which that is when I tell borrowers technically it's like you're rolling in your closing cost, or at least part of your closing cost, into the loan by doing it that way when you get a credit for that higher interest rate. But closing costs are broken down by the cost for the lender. Sometimes it's a flat fee, sometimes it is a percentage, maybe it's a percentage plus a flat fee, so you'd have to look at that. You have your attorney fees and title work, so that all goes to a separate, that does not go to the lender. Then you have like your county, your city, your state stamps. Then what else do we have? Your flood, if you have flood insurance premium, your homeowner's insurance premium, that would be 1 year up front that's required. Also, it's just calculated your appraisal fee. You would have a credit report fee. You would have a flood certificate fee. You would have some taxes, your aggregate, and you would also have to set up your escrow account. Now, most people have to set up an escrow account, which every lender is a little bit different. I would say I've normally seen lenders take 3 months of insurance up front and 5 months of taxes. This is on a purchase. If you're refinancing, it is going to be different. Just depends on what time of the year you're closing and it falls on. But normally you should sit somewhere around 3 and 5 months for the amount of time that the lender pools to put into your escrow account. Hopefully that helps, but if you have more questions about closing costs, please let me know, and I'd be happy to help.